If you've invested in ICOs on chain that, despite lots of marketing and lots of social media videos, has somehow only gone down in price, this video is for you. Raising capital and valuing assets accurately on chain has been broken for a long time, but this year, two separate systems have begun fixing this. One forces on-chain builders to earn their pay through product market fit, and the other is technology being used by services that are finding product market fit. And both just hit measurable inflection points this fall. And I'm talking about this because if you miss these kinds of shifts, you're going to keep focusing on teams with no accountability, and you're going to miss the business models that actually generate revenue you can invest in. I'm Frank. I run a non-custodial strategy firm that helps people move their wealth on chain. Our team of 20 plus experts studies pretty much every new project that comes on chain. And these two updates I'm covering now represent, honestly, the best evolution towards sustainable crypto business models I've seen in a long time. And everything I talk about here comes from on-chain data. There is nothing theoretical here. What we're going to cover is A, how MetaDAO has restructured fundraising, so founders are only getting paid when token holders make a return on their capital. B, why X402 enables value creation not available in Web 2. And C, what October's transaction data shows us to help us create value before the institutional money arrives. And this subject matter that I'm going through all falls into the category of internet capital markets, which is where real revenue, real assets, and real ownership all exist on chain. And for investors, this means you can finally own a chunk of next era businesses that might be the growth engine of the next decade. Now, for MetaDAO, let's understand the service it provides and why some high-profile VC funds are buying into it right now. MetaDAO is a fundraising platform. We've heard and we've seen fundraising platforms before. This doesn't sound very new, but MetaDAO is different. Typically, since at least 2017, fundraising platforms have allowed a team with an idea to sell tokens on-chain through a platform in order to raise capital to build out the idea that they have. But the problem for the last 8 years is when a team raises, say, $50 million upfront to build their idea, they actually face zero financial pressure to deliver on that idea. They've already gotten paid. And if you as the investor put $10,000 into that $50 million token sale, well, your $10,000 just became that team's salary with no strings attached. You got some tokens out of it, but with no connection to anything of value, your tokens are pretty much worthless, and you've seen that in the price of them. MetaDAO as a fundraising platform fixes this by hard coding accountability into the capital raise. And here's how it works. Capital raised locks into a smart contract treasury and is only released to the founding team when there is approval from the token holders. And now you might say, well, if the team holds a good chunk of the tokens, they might just approve the money in the treasury to be released. But projects raising capital through MetaDAO only allow the founding teams to get tokens when the token price multiplies from its initial offering price. Literally, the tokens only get released to the founding team when the price of the token 2x's, 4x's, 8x's, 16x's, and 32x's from the offering price, meaning the founders are only going to get money if A, the token holders approve it, or B, the founders engineer the price higher through building a service that drives value to the token price. The result of this mechanism is natural alignment. If you contributed capital to this raise in exchange for tokens, and if the tokens don't go up in price, the founders are not going to get paid. So the founders are going to do everything they can to drive the price of the token higher. And this mechanism is unique to MetaDAO because unlike the other fundraising platforms that we've seen over the last 8 years, MetaDAO is enforcing pay for performance at the smart contract level. There is no founder that can change the terms after you invest. And this model has been attracting some serious builders who are wanting to create long-term value on chain rather than just do some quick cash grab. And so for you as an investor, investing into a MetaDAO raise means your capital is more likely to go to a project where the founders have real skin in the game. The average performance of the assets that have launched on MetaDAO this year is over 200%, and that's the average. And more projects are launching right now as we speak and as I make this. Now, MetaDAO, it does have its own asset, Meta, and this asset gets revenue from the activity on the platform. So when projects succeed through launching on MetaDAO, part of that success flows back to Meta holders as a fee. So if you're holding Meta itself, you're not just betting on a single project succeeding. You're betting that there is going to be continued success and product market fit. Paradigm, a tier 1 VC firm, purchased $5.9 million worth of Meta on October 25th. And they did this because they see MetaDAO having arguably solved on-chain capital raising. This is very exciting and is a pretty big green flag for anybody who wants to come to the on-chain market with some seriousness. Now, the other advancement in internet capital markets from the past month that I want to talk about is very simple and it's very powerful. You've likely heard about AI agents, and if you haven't, imagine them as ChatGPT that just goes out into the internet and does things for you. Like what, you may ask? Well, anything you do on your computer right now, including opening YouTube and scrolling to find this video, you will be asking an agent to do for you in just a couple of years. Andreessen Horowitz, one of the most recognized VC firms globally, sees the AI agent economy processing over $30 trillion worth of economic volume by 2030. That is just 4 years away. X402 is a simple piece of code developed by Eric Reppel, who is a lead engineer at Coinbase, and it allows AI agents to autonomously transact with each other on-chain. Andreessen Horowitz argues that on-chain infrastructure, meaning crypto, is likely the only economic rail that agents can reliably use to transact with each other. The traditional payment systems like PayPal, Stripe, ACH, Swift, these are all censored by governments and their regulations like the Bank Secrecy Act. And these regulations force anyone doing any financial transaction to have first submitted a passport, an address, and a beneficiary name. And you know this when you open a bank account or when you send your money overseas to somewhere that is outside of your bank's known network. These traditional guys always require these details every time. And that's really a problem for AI agents because they don't have those details. They're not human. There is no way the legislation is going to change fast enough to allow a regulatory exception for AI agents, if that even made practical sense, which it does not. On-chain, AI agents can actually become economic actors. They can create content and sell it. They can manage your investments. They can maintain the inventory of your supply chain. They can react to prompts from your vendors and make those payments. Major blockchain networks very, very quickly integrated X402 in October. Developers of Ethereum, Base, Solana, BNB Chain, Arbitrum, just to name a few, all worked to integrate X402 within a week. And during the week of October 14th, for example, the X402 standard processed close to 500,000 transactions. That is a 10,780% increase from the previous month. On October 17th alone, Dune Analytics tracked over 293,000 transactions happening over the X402 standard. Over $332,000 worth of stablecoin volume was processed on October 16th alone. This is the stuff most investors never see until it's too late. This is actually economic innovation that comes around once every couple decades. And for you as an investor, this can be seen as a new market opening up in which you can participate. The first wave of applications using the X402 standard are happening right now, and examples are projects like Heurist and PayAI. Heurist runs a live marketplace where AI agents can hire each other. Market analysis, writers, coders. These agents are interacting, hiring each other, producing services and content for the owners of these agents. And the time these AI agents are interacting with each other, they are settling their payments in stable coins autonomously through X402. And you can actually go and watch these machines pay each other for the resources and tasks being completed. And all of this generates transaction fees that, in part, flow directly to token holders of Heurist. Now, PayAI runs on the same standard, X402, but it is focusing on agent payroll. You can think of it something like Stripe, but for on-chain AI agents or AI agents transacting with each other on-chain. When one agent uses another agent's service, it pays automatically using X402, and that transaction history and what that means for the owner of the agent is documented by PayAI. And in both cases here, the token's value, whether the token of PayAI or the token of Heurist, the value of this token reflects the transaction volume happening in their application. A portion of the dollar amount transacted in these applications is taken as a fee and sent to the token holders. Now, this might sound very interesting and maybe exciting to you, and it is. But to be clear, these projects are new, they are hype-ish, and they are super experimental. This is cutting edge stuff. But Heurist and PayAI are truthfully examples of a bigger trend. The economy is going on-chain. On-chain fees for 2025 are on track to reach about $20 billion in total revenue. That's close to Fortune 500 territory, except every on-chain transaction is public and you can verify the flows in real time. Lido, Radium, Jito, they're each generating more than $100 million a year from real usage. You can literally watch the numbers climb on public dashboards that track what happens on-chain. That's why, despite being tiny and unproven, the early traction of Heurist and PayAI matters. They are pulling their revenue from an ecosystem that just grew 340% year over year. When rating agencies start treating on-chain protocols like the revenue-generating entities that they actually are, your early action now will be benefiting from the lagging institutional allocation that will inevitably come sometime in the future. That's the edge that normal people rarely get to front run, but you can do it now on-chain. In summary, when you combine MetaDAO's value creative engine with X402's commercial capacity, you are getting examples of the growing on-chain economy. Every new economy gets investment opportunities that have not existed before. And you can see this shift as tasks move from people to software and the payments move from traditional banking to on-chain rails. Every on-chain payment represents revenue that traditional banking systems cannot facilitate, meaning you're getting access to economic activity that the big institutions that rely on banking cannot yet access. MetaDAO is proving raising capital on-chain works for the investor and the founder. X402 is proving that there are unique services that generate real revenue that can only exist on-chain. And together, these contribute to the internet capital market idea that isn't going to go away anytime soon. Thanks for sticking with me on this. You are early to a new economy. If you want to see where this is happening elsewhere, the next video somewhere on the screen shows the on-chain development happening on Base. It shows what adoption looks like when institutional grade infrastructure is built for on-chain consumers and what you can do to position yourself into this section of the growing on-chain economy.